All right, let's get into your stock picks. Where are you seeing opportunity at the moment, Cobus?
Going to be boring today.
Okay, it's fine.
Choose ABSA. Tying in somewhat with what we mentioned earlier about interest rate expectations, ABSA gets less of that endowment effect. As interest rates increase, we see banks being able to lend at a bigger spread to their borrowing rate typically, and ABSA benefits less from that. They are hedged, but the converse of that is that they are well positioned when interest rates get cut relative to the other banks in particular. We believe the sector in general, with the exception of Capitec, have languished somewhat. They are incredibly cheap, and ABSA in particular. One of my first boss had a filter set on Bloomberg for stocks for situations where the dividend yield would cross the PE ratio, and that would either be indicative of a company going bankrupt or an enormous buying opportunity. And in this instance, we believe for ABSA it's an enormous buying opportunity. The stock is very cheap. And another little tailwind, which doesn't get much airtime. Part of the reason they had disappointing results 18 months ago was devaluation and an effective IMF bailout restructuring within Ghana. Ghana being one of the two largest ex-South Africa markets together with Kenya. And that market has turned around enormously, mostly because of gold. Ghana being an enormous gold exporter, generating significant foreign reserves, exceeding those IMF targets in terms of timeline, and the cedi has appreciated enormously. So we should see some sort of a correction there, some of those currency losses turning around and improving in ABSA's next set of results, which I don't think the market is quite cottoned onto, and that in addition to the local tailwinds, we believe will lead to a good set of results and hopefully a bit of a re-rating.
And what about you, Skalk? Where are you seeing opportunity?
Cobus taunted me earlier, and I'm not going to disappoint him at all. I am going for gold. Yeah, Goldfields. Yeah, I know a lot of people tell me, all the easy money has been made. Goldfields really done extremely well, like most of these other counters. But thematically, I mean, look at the environment we're currently sitting with. We're sitting with an environment where there's major worries about the US debt levels. There's worries of possible recessions, even stagflation. We know that all those are very much in play. And when I look at this, I'm not going to really go out there and say, well, the gold price are going to go to $4,000 per ounce or $5,000. I'm just stating that even if the gold price remain at current levels, a mine like Goldfields are extremely cash flow positive, and let's put that just in data and figures. As we sit here, they came up with the operational update I think a week or two ago, and they mentioned they all in cost for the past 12 months or currently is below what it was exactly a year ago, which is $1,861 per ounce. And I think the all-in sustainable cost, $1,625 per ounce. So even if the gold price stay at these, let's call it $3,000, $3,300 levels, these Goldfields are going to do extremely well. I don't foresee the geopolitical environment changing anytime soon. I do think that the uncertainty, the volatility, and definitely this economic worries that we're currently seeing is going to be sort of a main theme for the next 12 months. And while I'm doing that, I still am very easy and very at peace with having some Goldfields in my portfolio. People will say, well, it's maybe a bit on the rich side. I mean, some of the technical analysts will say maybe on the overboard scenario. Then again, the most of the trend followers will say, make the trend your friend.
All right, gents, thanks so much for your time this afternoon. That was Skalk Low from PSG Wealth and Cobus Potgieter from Southern Cross Capital. Do remember that Stockwatch pre-records on a Monday and Wednesday at 1 p.m. and is live at 6:30 p.m. on Tuesday and Thursday, while Stockwatch this week is live at 12:30 p.m. on Fridays. Keep that in mind and keep your questions coming through. For now, that's all from Stockwatch this week, but do stay tuned for lots more coming up right here on Business Day TV.